A very good morning and welcome to Business Points, where we break down major economic stories shaping Nigeria's markets, policies, and investment climates. Today on the show, we'll take an in-depth look at the Central Bank of Nigeria's latest monetary decisions, the Rural Electrification Agency's ambitious financing move, and the oil and gas sector's tightening regulation and worsening congestion at the Lagos ports, new changes to Nigeria's cash management policies, and the controversy in the mining sector as operators reject a proposed 6-month shutdown. This is heavy night of policies, analysis, and sector-wide implication. So let's begin our business points. After this break, we'll get right into our first story, our business story for this morning. All right, welcome back to Business Points. The first business story we have this morning is from the Central Bank of Nigeria, where the CBN holds benchmark rates steady in this inflation phase. All right, so the Central Bank of Nigeria at its latest Monetary Policy Committee meeting voted to keep the benchmark interest rate unchanged at 27%, signaling a cautious but intentional move to sustain Nigeria's ongoing disinflation trend. This decision comes at a time when headline inflation has been moderating for several consecutive months, dropping to just above 16%, down from previous highs that had eroded purchasing power and created volatility in the consumer market. All right, so the Central Bank of Nigeria is saying let us remain at 27% for interest rates, and this is coming after the latest Monetary Policy Committee meeting voted to keep the benchmark interest rate in Nigeria at 27. All right, so 27% interest rates. A lot of persons have talked about the fact that it is a little bit too much, considering that there are countries where you could get interest rates for 8%. There are even private sector people, lenders who borrow money or who lend money to businessmen at 10%, or even single-digit interest rate like 7%, 6%, 5%. But the central bank, when it was 27 at the time, a lot of Nigerians complained about the fact that it could make it very difficult for people to be able to make profit, because that's almost 30%. So if you are getting 100,000, right, that means you have to pay 27,000 as interest. How much business are you going to do for which time period and all of that? But I think of recent, we've seen some level of moderating in the business sector. We've seen some level of moderating in the country, where it seems the interest rates has been stabilizing, and it has signaled some form of investments that have been done by the Central Bank of Nigeria and also by other Nigerians across the board. The Central Bank have voted during their latest Monetary Policy Committee meeting to keep the interest rates of the country at 27%. And this is quite an intentional move to sustain the ongoing disinflation trend that has been going on. We've seen some 4, 6, 7, 8 months ago, there was a lot of inflation in different sectors of the economy, but we've been seeing some level of moderation in the inflation, and in economics you could call it the disinflation trend. It is when monetary policies are made to reduce the level of inflation in the country, and I think so far so good. We've seen it. Now we're even having a dollar go for an naira for about 1,400, 1,420 and all of that. So the Central Bank is saying, let's be cautious, let's keep it here at this time, let's keep monitoring the market, let's see what happens if we can reduce the interest rates that were given to subscribers in the country. Right? So this decision comes at a time when headline inflation has been moderating for several consecutive months. We've seen the inflation dropping to just about 16% now in the country, and this is quite amazing. Because since this President Bola Ahmed Tinubu administration came into power, this is the first time that we'll be having inflation drop by 16%, down from the previous highs that eroded purchasing power and created volatility in the consumer market. So the CBN also adjusted its standing lending and deposit facility corridor to plus 40 minus 450 basis points around the MPR. This means banks now have a narrower upper window for borrowing from the CBN and a wider penalty for depositing excess liquidity, a movement to encourage lending into the economy rather than holding funds at the apex banks. All right, so why this matters is that the monetary policy rate is the anchor for interest rates across the financial system. The monetary policy rate is the anchor for every other lending operation, for the banking industry, for those who are in insurance and in every other sector in the country. All right, so keeping it unchanged means that borrowing costs for businesses and households remain high, right? At 27% is still very high, but banks will continue pricing loans at an elevated rate above, let's say, if banks are getting their loans at 27%, that means they also have to make profit at the end of the day. So we could be seeing banks doing loans for 30% interest rates because of this particular policy, especially for banks and SMEs. So the CBN is also signaling stability, allowing previous tightening to continue pulling down inflation rather than taking fresh aggressive action. It supports stability of the naira by keeping interest differentials attractive, especially to foreign investors. And what we could see in the economy of Nigeria is that we could see borrowers' credits remain expensive. Business seeking loans for expansion of working capital must contend with high repayments burden, which is not good for our economy. For the bank's profitability remains strong because high interest rates spread actually favors the bank more. Right? So for the banks, yes, the profitability remains very strong. However, there's also risk of loan defaults as this actually increase. For investors, fixed income instruments like treasury bills and bonds remain attractive because of this particular 27% that has been voted by the Monetary Policy Committee meeting of the Central Bank of Nigeria. For households, high lending rates may restrain mortgages, personal loans, car purchases, and other credit funding spending. For the exchange rate, a steady exchange rate supports naira stability by maintaining foreign investment appetite for the Nigerian fixed income assets. So yes, it is a slowdown in inflation due. Of course, there's been a slowdown in inflation due to the CBN policy or market factors like reduced consumption. So should the CBN begin cutting rates to 2026, we may be seeing inflation keep going down. Already now we have 16% all-time low for inflation. Inflation is dropping in the country according to the statistics that we are getting, for less than 16% that we are seeing now at the time. And the CBN says let's remain at 26%, 27%, I beg your pardon, for this particular monetary policy. So this MPC decision sets the tone for the 2026 economic management, with the apex banks trying to avoid premature easing. All right, so that's some of the things that we're expecting will happen as a result of the central bank saying let's stay with 27% for interest for banks, especially banks who are doing business with the apex banks, that's the CBN. All right, so absolutely amazing that we're seeing at this point inflation dropping. This inflation has been pushed by the policies of the CBN. I remember when at the time the CBN put up this policy of 27%, a lot of persons reacted negatively as to how this is going to affect the market, and truly we struggled a lot. For those who are in the real estate sector, they complain, SMEs complain, small and medium scale enterprises, entrepreneurs complain, everybody, even households felt the heat of this. But already we are seeing the policy stabilizing the economy. Yeah, the naira to dollar is at some point stabilizing now, and the interest rates, not the interest rate at this time, inflation is actually dropping, right? And this is what the ordinary Nigerian needs. Let's take the next story for the next business story that we have for you this morning. Rural Electrification Agency plans 500 billion capital market raise. All right, so the Rural Electrification Agency, REA, has announced a bold move to raise 500 billion from the Nigerian capital markets through its newly created renewable asset management company, RAMCO. All right, so the renewable asset management company is a Nigerian capital market company created by the Rural Electrification Agency, REA. Rural Electrification Agency is one of the agencies of government that is tasked with providing affordable electricity to Nigerians across board, and they've actually been doing a lot of amazing work. I've spoken to one of their directors. I spoke to him, I think 2 months ago, about the work they're doing in expanding solar power, all right, across different sectors in Nigeria. And so this agency of government has actually gone ahead to create another agency, to create what is called the Renewable Asset Management Company. So the Rural Electrification Agency is creating a renewable asset management company that is called RAMCO. All right, this company will serve as a special purpose vehicle holding and managing REA's renewable energy assets valued between $200 million and $300 million. All right, so these assets will serve as collateral to attract long-term private investment into this particular sector. So Nigeria's off-grid renewable ecosystem, mostly solar mini grids, smart meters, hybrid system, and rural cluster, has grown rapidly over the last 5 years. Yet, there's been severe underfunding. Millions of households and thousands of rural businesses still rely on kerosene, firewoods, and small generators to be able to do business. And what REA is saying is that now you'll not be able to raise this 500 billion naira. It's actually 500 billion naira. Let's be able to raise this 500 billion naira to expand our off-grid availability in Nigeria, expand off-grid electricity access so that people can do better businesses, reduce dependence on diesel and petrol generators, and also increase renewable energy penetration, especially in rural and underserved communities. And this will go ahead to create long-term jobs in installation, maintenance, and solar logistics for those who will be doing this business, and build investor confidence in Nigeria's clean energy market. All right, so traditional funding for REA projects have relied heavily on government budget and allocation, international grants, and development finance institutions. But what this REA is saying is that let us, because the times are limited and unpredictable, especially the market has really been unpredictable in the last 5 years. We saw interest rates rising, we saw investor confidence at the time going low. Some persons will not want to put their money into an agency of government like that, but if they know that it's a special purpose vehicle vehicle, a company that is being managed by the agency. Maybe investors want to put in more money, right? So RIA is seeking to get from Nigeria to be able to get all of this money out of Nigeria, 500 billion naira for investments in solar assets and renewable energy assets across all of Nigeria. So moving into the capital market, we'll see RIA now start to tap into Nigeria's private savings and institutional funds, create long-term infrastructure-backed investment products, signal a shift towards commercial sustainability for the renewable sector. And some of the things that we would like to consider as risk could be investor confidence in government-backed infrastructure. Security is actually mixed at this time. Revenue collection from rural grids could be challenged by affordability. And this is one thing we have to talk about, all right? Let me just take a pause here and explain this well for those who are listening. All right, there's also talks about revenue collection from rural grid. So if RIA goes ahead to create this company and there's some investment, and let's say they pick up clusters and there's a rural electrification solar grid in that particular place, how do we charge the people? Who gets the money for the people who are using the grid? All right, this is not just a one off-grid solution. I mean, grids that are connected to a whole village. Let's say we have one village that is powered totally by solar. How do we get funds from those who are subscribed to that particular rural grid? Who gets the funding? Where does the money go to? These are some of the challenges that must be properly highlighted and aligned by RIA for Nigerians to be able to know, so they don't challenge the affordability of this particular system. All right, so asset protection and security risks may emerge, especially in remote communities. Who protects this solar installation that is done in villages? These are some of the questions that they can talk about. So the question is, can RIA attract 500 billion naira into the difficult Nigerian capital market? Is renewable energy commercially viable in rural Nigeria without subsidies? Can this shift position Nigeria as Africa's renewable energy leader? These are all questions that you may want to ask at this time as RIA goes ahead to be with this very ambitious plan to raise 500 billion naira to invest in Nigeria's renewable energy sector. Let's go for a short break, and when we're back, we'll take on the stories this morning. It's still Business Point on Global Television. My name is Ubong Usoro. All right, welcome back. If you're just joining us, this is Business Point on Global Television, and we're taking other stories now, some other business stories at the moment. NCDBN bars middlemen from NCEC certification. So the Nigerian Content Development and Monitoring Board has taken a decisive step to block middlemen from participating in the Nigerian Content Equipment certification process. Previously, several brokers and consultants allegedly filed for certification on behalf of companies, creating room for fraud, inflated cost, and unfair advantage for unqualified firms. So right now, what the Nigerian Content Development and Monitoring Board is saying is that only genuine Nigerian companies with verifiable manufacturing or assembly capacity will be allowed to apply for the NCEC. All right, so somebody wants to ask, what is the NCEC? NCEC is the Nigerian Content Equipment Certification. Nigerian Content Equipment Certification is a certification that is given by the Nigerian Content Development Monitoring Board. Nigerian Content Development Monitoring Board gives this particular certification called the Nigerian Content Equipment Certification, NCEC, which is a certification for those who are involved in companies who are involved in manufacturing or assembly in Nigeria, assembly of maybe cars, products, machineries, and all of that. So the NCDMB is saying, the Nigerian Content Monitoring Board is saying, no more middlemen or proxies or consultants will apply for companies. So companies who want to get the Nigerian content certification should come straight to the Nigerian Content Development and Monitoring Board for their application. So middlemen, proxies, and undocumented agents are eliminated from the chain. The move strengthens transparency and will protect local companies from exploitation. So the NCDBEM's goals is to deepen Nigeria's participation in the oil and gas value chain, ensuring that equipment used in the sector meets quality standard, local manufacturers benefit from government-promoted opportunities, the integrity of the Nigerian content development is maintained, and we could talk about some companies who struggle with documentation since middlemen previously assisted them to get this certification, and this certification have timelines, right, and could temporarily slow down due to stricter verification. Foreign companies partnering with Nigerian firms will need to go through thorough compliance and checks, all right, so before they can actually do this. So what the Nigerian Content Development Monitoring Board is doing is to be able to check anti-corruption and administrative burden. Will this reform make the business easier or harder for local manufacturers? These are questions that Nigerians are asking at this time, and as this kicks into effect, we'll be able to answer some of these questions. Could increase confidence in Nigeria's local content environment. All right, so let's take another story before we take the last story for this morning. It's shippers decry bottlenecks at Lagos ports. Shippers decry bottlenecks at Lagos ports. All right, so the Shippers Association of Lagos State is raising alarm over the worsening bottlenecks at Lagos ports, challenges that are crippling import and export operation. Some of the problems they've talked about is illegal levies and extortion at multiple checkpoints, delays caused by overlapping regulatory agency, arbitrary container stoppages without explanation, long queues that force shippers to wait for weeks or months, inflationary effects on goods due to the rising demurrage and storage fees, some shippers exiting the business entirely due to losses. Alright, so the Lagos ports handle more than 70% of Nigeria's seaborne trade, and if bottlenecks persist, it could lead to the cost of goods rising further. Export competitiveness will decline, and Nigeria's risk losing business to more efficient neighboring spots such as Cotonou, Tama, and Lome. Alright, so Cotonou is there, Tama is there, Lome is there, and if Nigeria is not doing well, some other person may prefer to take their business to those points. All right, so Lagos remains one of the slowest spots in Nigeria. Lagos port remains one of the slowest in terms of getting things done fast. It remains one of the slowest in Africa, and this inefficiency can contribute to inflation at some point. So Nigeria needs to wake up and get to do it the right way, so we can actually have the Lagos ports decongested on time. Let's take the last story that we are doing this morning on Business Point. CBN ends cash deposit limit for bank customers. All right, so in a major reversal of cashless policy era, the Central Bank of Nigeria has abolished all cash deposit limits effective January 2026. Individuals and businesses can now deposit any amount of money without paying excess cash handling charges. In addition, weekly withdrawal limits for individual rises to 500,000. Then corporate banks can withdraw up to 5 million naira per week. Alright, so businesses complain that cash deposit limits discourage full banking revenues. Banks that have infrastructure to manage large inflow can go ahead and do it. The CBN wants to encourage financial inclusion and reduce fear of banking cash. Alright, so it's about cash. So for those who are doing private businesses and you need cash, the CBN is saying that the limit for you is that you can get up to 500,000 naira cash from the bank in a day. And for those who are corporate businesses, the highest you can get in a week is 5 million naira cash. So we are going into the bank to make withdrawal for cash, and not make transfer, and you need to see the money cash. What it means is that as an individual, you could only get only 500,000, and for those who are in the corporate environment, you can get up to 5 million naira. All right, so the CBN is trying to make it easier for small businesses to deposit daily. Farmers, traders, rural businesses may also benefit the most. And we could talk about flexibility of the policy or inconsistency, because remember that the CBN were the ones who talked about this at some point, and they're also the ones who are actually reversing this particular policy. The last story that we'll take this morning, we will not do analysis on it, is that miners reject governor's 6-month mining ban plan. Remember that the northern governors recently floated the idea of a 6-month ban on mining to curb insecurity and illegal extraction, but the Miners Association of Nigeria and other operators have rejected the proposal. All right, so that's all of the story that we're able to bring to you this morning on Business Point on Global Television. Like I say every morning when I come on the program, remember that Nigeria is at a crossroad between tightening regulation and stimulating economic activity. The CBN is choosing stability over aggressive reform, while the Rural Electrification Agency is shifting towards private capital for business development. We've also seen the Nigerian Content Development Monetary Board is cleaning up the oil and gas certification, while the Nigerian Lagos Port remains a major drain on trade competitiveness. Cash policy is becoming more flexible, perhaps we may say too flexible. The mining sector tension reflects Nigeria's struggle to balance security and prosperity. As always, these policies will determine how businesses grow higher and produce and compete. Do some business today. Remember, Global Television means business, you mean business, and we must all do business, right? Bye for now.